Today with me is Mike Bell, the CEO of First Graphene, a graphene producer out of Australia. Mike, first of all, thank you very much for your time. Thank you for providing us updated information, and thanks for being here.
Thanks, Jan. Pleasure to be talking again.
Mike, can you please tell us where the graphene market is at the moment? Give us a brief overview about the current situation. How is the market developing when it comes to the graphene market overall?
Yes, so over the last couple of years, I've been involved in the graphene space for about 3 years, so I can sort of speak in the last 3 years. We have seen a steady increase of applications that are being commercialized. The material itself is in process in terms of being commercialized and finding its way into end applications. And over the last 3 years, there's been steady increase in terms of breadth of applications. We are intimately involved with our clients to get our graphene performing in their applications. Now, in the last 12 months, we have added numerous applications into those. So when I say applications, I mean clients who are actually buying graphene. They're moving from trials and validation into commercializing their product and actually buying graphene from us. This now has recently been expanded into elastomeric waterproofing coatings. So this is a paint and waterproofing product, into lubricants. So lubricants is quite a big space, obviously oils and greases, but also bearing protection from corrosion. So these applications have come about in the last few months, and they are all moving into a production frame. But when you look across all the industries, for instance, we spend a lot of time in the cement and concrete space. This is a process in an industry that is relatively slow moving, but the potential size of it is massive. So whilst we've been through numerous trials with our UK-based partner, Breeden. We've made great progress in understanding the product that we need to use to put in, how we're going to put in, and we'll solidify that in the coming months with a more go-to-market proof of concept in our trials. So I think the market itself has really increased in speed of adoption. It is still not where we would like it to be. We would like to be moving a lot faster, as would all of our investors, but it's making steady progress, and those each win is a real feather in our cap to getting it through a client, convincing a client, getting it into production, etc. And those small wins all build into that journey to break even and beyond. So it's exciting. We're seeing the tick rate of new applications being verified and getting orders increasing. Our recent quarter probably saw the highest number of individual purchase orders coming through, which is exciting. We've gone from sort of 2 to 3 paying clients or repeat paying clients up to the 20 to 30 paying clients. So that's just steady progress. And it's exciting because as they adopt them, prove in an application, their volumes then increase. So we're looking forward to that as we move out of this financial year into the next one.
All right. Thank you very much for your update on the overall market. But when it comes to investing into companies, right, from an investor point of view, you always want to invest into the best horse, let's call it like this, when it comes to a horse race. Let's talk about graphene there. Where would you rank your company when it comes to the overall market? I think there are a lot of graphene companies out there. Is there anybody as good as you? What are your thoughts on that?
It's a good question to ask the CEO. I believe that our company is one of the leading graphene companies in the world. And there's a couple of reasons for that. Firstly, our product. Our product is, by definition, graphene. It's very high quality, very controllable process in terms of the platelet size and the thickness of them, and how we customize those for our clients. So we have the ability to change the size of our platelets, the thickness of them, the acidity of them, all to tailor into an application. So that's quite a skill to do that. We also have the volume. So our plant in Australia is currently rated about 100 tonnes per annum, and that's a significant volume in the world of graphene. And when I say in the world of graphene, I mean pristine platelets. I don't mean a micronized graphite, which is often confused for graphene. So we have that tonnage, and because of that tonnage and our process, we have a costing structure that is very favorable to market. We don't often come across situations where we can't compete on a price level. We are very very well or very flexible in how we cost our materials in the process to make it. As you'll note, our recent announcement, we have further improved our efficiencies of making. We've reduced our power consumption. We've even expanded into be able to produce graphene oxide now through a very similar process to our graphene process. So those three things really set us aside or stand out when you compare it to other graphene companies. And lastly, we actually have paying clients. Many graphene companies are still at an R&D level. People are still trying to figure out how to make their material in volume. They're also all trying to find those applications and finding clients to buy their graphene. We are definitely further ahead than the majority of graphene. We have revenue. We have a fairly clear path to break even. We increase our number of clients every day. And we are now de-risked across vast numbers of applications, so from lubricants to coatings to composites to concrete, etc. So very, very low risk, very diversified client base.
All right. Mike, thank you very much for your insights. And I think we should dig a little bit deeper into some details you already mentioned. First of all, you've been able to achieve significant efficiency gains when it comes to the production of your pure graph material. This will lead to enormous cost savings, obviously, but on the other hand, you can probably have more margin on your products now. Tell us more, what does it mean for the company going forward to have such massive cost savings?
Yeah, it's a good question. Most people will know that in a business like First Graphene, our road to break even is a balance of what we're spending, but also the margin we get off our sales. Now, we have a very competitive cost structure that we continue to leverage and push into new industries. As I said before, we don't really come across situations where we can't meet a cost expectation in a specific application. But we always need to be focusing on driving our costs down. Graphene is not a commodity. That's not to say it won't be at some stage. We need to be ahead of the game to make sure that we stay ahead of our competitors. We're providing the best product at the most suitable price, but also at the most margin. Now, driving and working efficiencies, reducing power consumption, improving the quality and the repeatability of our products are essential to our longevity as a provider in this space.
All right. Thank you very much. And you also provided an update on the trials you're doing with the concrete companies, especially Breedon when it comes to the UK. And you further improved your trials over there. Maybe you can just give us a little bit of an update. What's going on over there? What does the outcome mean for you? And do you think we can expect some larger orders of your product here from the cement and concrete industry here soon?
Yes. So we've been through two sets of trials with Breedon. So Breedon is the UK's largest producer of cement. And what we are doing differently than any other graphene company is using the cement as a carrier to get graphene into concrete and get its benefits. That obviously comes with some challenges, i.e. scale. So when you dose cement with graphene, you're talking at plants that produce thousands and thousands of tonnes on a daily basis. So the scale is very, very different to, let's say, a laboratory or trying to put an admixture into concrete. But the rewards are greater. It is easier to do once you know how to do it, but also the reliability and the dosing of it becomes a more straightforward process. Our first trial, it generated positive results that showed a definite decrease in CO2 emissions for the same strength concrete. And it's a product structure that's quite unique to the UK between their CEM1 high-end cement and CEM2, which is a more hybrid type product with lower clinker. And we've had results that say we can actually get the lower clinker cement working within tolerance of the high-end cement. And so that basically means it's a lower CO2 emitting cement. So that was a success. It proved out the concept of what we're trying to do. The second trial was more about the dosing. How do you dose thousands of tons of cement? How do you ensure you can do that without adding too many other chemicals like grinding aids or water into the process, etc.? So that trial, we figured out that dosing rate and also a dosing mechanism. We are now planning a third trial, which we'll announce in due course, which really is a customized product more of a go-to-market solution, and a revised dosing method. So the dosing method is in a cement factory, how you put additives in is quite crude, is quite basic, and we're talking about very, very precise percentages and dosing rates, and so we need to control that and get our head around how that works. So we've got a solution to that now. So our third trial will be in the stages of planning at the moment, which we will announce in due course.
Great. Sounds like a good progress when it comes to the concrete space. Let's also have a look at the hydrogen production, because you had a news release for new possibilities in that space as well. Is this also something we could expect some revenue generation soon, or what's the status when it comes to the hydrogen?
Through some work with the UK government, we've generated some data that suggests a graphene-enhanced electrocatalyst used in electrolyzers in the production of hydrogen that perform in a very superior manner, or a very superior performance to what you currently get in sort of very expensive minerals you use today. So it's not something we would expect revenue from in the foreseeable future, but it is something that could, it could generate a huge amount of positive impact into the space in reducing the production of hydrogen. We're investing through further UK grants into the development of those materials, and also trying to find those commercial clients that would be interested in exploring where that would take us. So it's very early stage, but it's exciting to see any opportunity that says we could reduce the power consumption in these electrolyzers by 50%. So that, in terms of opportunity, is huge, and it's something we need to run the course and make sure that we've got something that is marketable and of commercial value before we start thinking about revenue on it.
All right, thank you very much. We now also talked about revenue, we talked about money a little bit, but let's talk about the future and how good the company is financed right now, because you're currently still on your way to the break even. How good is the company financed, and what can we expect in the future when it comes to money?
Yeah, so at the moment, most people know that going into the end of last year, we went to the market and did a share purchase plan with our current investor base. We raised about 3 million Australian, which was fantastic, and it really gave us confidence in what our investors think of us and how they see our future. So that really does help us move things along through this year. We have also continued to tighten our cash flow. We are much improved over where we were 3 years ago. Even a year ago, we've reined in a lot of our development costs into those that we can associate directly with revenue. So it puts us in a strong position looking through this year. We always welcome new investors to our register. We have, as with many microcaps, ASX microcaps, suffered in the last 12, 24 months. That's no different to any other microcap on the ASX. But we also see that we are making really solid ground, including revenue generation, drive revenue up, but also adding those applications that are now signed off and cementing in our client base longer term.
All right, sounds good. Mike, my last question for today is about our Invest trade show, which is in Germany at the end of this month, and you will be at our booth. Why should people come? Why should people come and talk to you? Give us a little bit of understanding, and how can people prepare to a meeting with you?
Yeah, look, the German investment community now makes up a significant part of the First Graphene register. Our third largest holder is based in Germany. We have really, we appreciate that people see the value in this type of material. If you look across the world, Australian, we're listed on the ASX, and it is historically a large sort of focus on mining stocks. We don't see ourselves as a mining stock. We see ourselves as a industrial materials company, and that's really what we are. We're not working the usual sort of mining company life cycle on mines. We are building IP. We're building a long-term business. Attending Invest is an opportunity for me to meet with our current investors, which is always a really positive discussion as I can sort of share more about details in terms of applications, how that associates with revenue, the type of clients that we're in extended trials with, and things like that. And also new investors that want to understand a bit more about graphene, what it's all about, why it could change the world, and where it's at in that journey to commercialize.
Great. Mike, thank you very much. And I'm looking forward to talk to you soon and to meet you in person by the end of April. Thank you very much for your time today, and see you soon.
Yeah, thanks, Jan. And I'm looking forward to being back in Germany and attending Invest. So I will see you shortly. Thank you so much.